Shell reported its best quarterly profit in 4 years this morning, driven in large part by surging oil prices due to the Iran war. Joining us to give his thoughts today on the quarter is Shell CEO Wael Sawan. Wael, welcome back. Always good to have you. Appreciate it.
Thank you. Good to be back.
We speak all the time, and we certainly spoke at the beginning of hostilities, and the worry was how would large integrateds manage this disruption. You've done it. Is there an easy explanation as to how?
I wish there was. The real explanation, though, Carl, is that it's been quarter after quarter of focus on relentless performance delivery, and this quarter showed it. We had record performances in every part of our business, whether it was upstream, whether it was, for example, our refining business, which in essence was running at utilization rates of over 100%, or our integrated gas business. Every part of the organization did well. In addition to that, of course, our world-leading trading and supply business could take those molecules and optimize them by selling them into the market at the appropriate prices. And so that combination of a terrific asset base performing and a trading and supply capability that's second to none is what really gave us the ability to navigate this volatility. And this reality of a volatile energy market is one we've been talking about. We've talked about it together, Carl, for quite some time. We are building a company that is able to navigate and thrive through volatility, and we do that through that combination of great assets and strong trading.
How do you think about the disparate narratives between the raw product and distillates? And do you see that spread getting wider, assuming nothing major changes on the geopolitical front?
I think it moves through the cycle. So what we found in the early days was a lot of the demand on the product side being jet fuel focused demand, which meant that the feedstock crude was going into refineries to be able to max out on jet fuel production. So for example, in Shell's global portfolio, we increased the production of jet fuel by around 20%. Now that comes at the expense of diesel and gasoline. And today what you're seeing is all the price signals are that we are short diesel and gasoline, which means we need to be able to now re-optimize at the refining side. This is one of the things we've really built into our refining business. We have our traders sitting side by side with the asset managers, working on both sourcing the feedstock and managing the outlet of the product to be able to maximize value across the chain.
That's interesting color. I was going to ask you how geopolitics are motivating investment decisions you're making, especially given we saw overnight Iran attacking U.S.-based assets in Egypt.
There's two elements, Seema. One is our long-term perspective on investment. The fundamentals continue to guide the majority of our capital decisions. We continue to see strength in, for example, the oil complex. We are particularly bullish on LNG longer term, seeing a 65% growth in LNG demand out to 2050. So many of our investment decisions are decadal investments, and we look through the short-term volatility.